investor. They should go out, and if the person doesn't say, I'm going to be the lead, just forget it, go on to the next person. Once you've got the lead, then go back and corral the rest of the investors, much as Amielle did. So that would be my best suggestion, is to find the lead.
But we're really lucky here, though, in BC, sorry, Amielle, to have such great networking opportunities like this one today. And we've got the New Ventures Forum, which the Innovation Council supports. We've got we've got the Green Tech Exchange now that's taking place. We've got monthly angel meetings. And, to give you an example, I see Yad Garcha sitting there in the front. He came to one of our angel meetings, and this professor from Simon Fraser had a crazy invention, and he was looking for some help, and he gave a 3-minute pitch, and Yad said, hey, this sounds exciting. And so they've been working together, they've raised some money, and they're off to the races. So, there are those opportunities, and I think it would behoove all of you in this room to make sure you know about these events. It always amazes me, like even today, coming to this event, a lot of people said, well, what are you doing this afternoon? Well, I'm going to Connect 09. Well, what's that, and who's doing it? And they did happen to see the pictures in the newspaper, but other than that, they weren't familiar with the event. So I think it's up to each and every one of us, especially those of us looking for money, to be really aware of all of the great resources that we have in our backyard.
I got to add to that. I'm sorry.
Go ahead.
Because I knew you were going to bring up the forums. Being someone who's presented at numerous forums, they're okay, they're good. To a certain extent, but look, this is the whole thing with
well, what don't you like about
capital.
them?
When you raise capital, it's a sales process. You identify targets, you outline your value proposition customized to those targets, and you go after them. Mm-hmm. It's not random. It's not sort of, you do have some sort of shotgun approach because you are competing against very, very many people, but you've got to treat it like a sales process. And going to these forums, if you've identified targets that would make sense, or it's, I don't want to say.
But couldn't you find the targets at those forums? Because, for instance, we have the biotech life sciences stream that Felzel Lee runs, and so people that attend those are typically people that understand that business. So an entrepreneur with a new drug discovery idea would probably connect better at those. Maybe you pitched your deal at the biotech forum. Because it's hit and miss, right? If you're lucky, there may just be one person who just really relates to what you're doing. And like you say, you've got to just keep exposing it to a bigger and bigger audience.
I'm not saying that forums are not worthwhile, but it should just be a part of your financing strategy. Right. That you attend just in case. There could be somebody there that you haven't already identified, but you really need to treat this as a sales process.
Another question here.
Question.
I was wondering, how do you value intellectual property, in particular patents? Would you be interested in investing in a startup with a good set of patents or patent applications?
I'd love to do that. My favorite story in that category is a company called Brightside. And when I first saw that company, it was one student at the university, along with a gentleman in the back row there. And what Brightside had was 7 patents that I spent quite a few months reading, did my own patent research. I got quite excited about it. And that was the highest value that I'd ever paid for a pre-revenue investment. And that company never did generate any significant revenue, but Richard, who was the CEO at the time, managed to sell it for $28 million in cash to Dolby Labs in February of 2007, if I remember correctly.
Did you know that he was shooting to sell it for $28 million at the time you got involved?
I was just hoping for significantly more than I invested at, which did happen.
Because the reason I asked that question is because, and Basil, maybe you can chime in on this, but more and more investors are asking the question, in addition to what they're investing in, is how and when will they get out of the investment? And it's not good enough to come and make a presentation and just say your exit strategy is to be acquired by somebody. I think it has to be very specific with some numbers, and that will, to a large extent, drive the investment going in, because if you say to an angel investor that you're going to sell your company for $20 million in 3 years to company X, and you have a strategy for doing that, that can be very attractive. But I think if you told that story to Mike, he might say, well, that's just not big enough, so don't waste my time talking to me about it. So I think knowing what your end game is going to be is very important right at the outset. It's really, what your vision is for the company. Is it, how big is it going to be? What's your own personal aspiration for the company? Where do you want to take it? A comment before we take a question at the back?
Well, certainly. I mean, one of the things that's changed in the market in the last 4 or 5 years is that you can get interesting companies started for a lot less money than might have been the case before. And it's particularly true in web-based businesses and sort of business 2.0 kinds of things. And we in the venture capital industry, those of us that want to put a significant amount of money to work in a company, are really struggling with that, because you can raise $500,000 or $1 million and sell a company for $10 or $20 million. Sometimes people refer to those as tuck-ins. They're just businesses that fit naturally with another company. And they don't make a lot of sense for us, but they make a ton of sense for angels because they can get a really great return and relatively quickly on those. So I think it's important not so much to know exactly how you're going to exit, but to have a sense of the kind of company you're building. And I don't think it hurts at all to decide that you're not looking for global dominance, you're not looking to build the next Twitter, you're just trying to do something very specific, and you've got a sense of who might find that attractive as an add-in to their own product or whatever. And I think that's a completely legitimate business model. It's not one that I'm particularly interested in or able to pursue with my own business model, but I think it's a great business model. What happens sometimes, though, is companies that are going after something a lot bigger end up being sold unexpectedly, maybe more quickly than expected. And certainly one of my angel investors summed it up perfectly, which was that it's a great outcome, but it's not a very good plan. And I think what's really important there is you have to have a plan on the nature of the business that you want to build, how that gets financed. And if something comes along that allows you to exit opportunistically, that's great. But you have to be focused on building the business that you have in mind and financing it appropriately.
I think what Mike said is very important. And the world has changed quite a bit in the last few years. And today I believe that entrepreneurs have a choice that they have to make very early on in their financing strategy. And I think that the entrepreneurs need to have a well-developed exit strategy before they contact the investors, for the reasons that Mike just said. There's really two types of tech companies today. The kind that can be built and sold in 3, 4, 5 years, and that need less than $10 million of capital. And then the other kind that typically needs significantly more than $10 million of capital and probably will take closer to 10 to 12 years to exit. And it doesn't seem to be a lot in between. It seems to be that there's kind of a double peak in the distribution. And if you're an early exit kind of company, angels are your preferred source of financing, as Mike suggested. If you're dealing with a company that's going to need longer and more, then traditional venture capital funds are the best place to obtain that capital.
But I would say you can't avoid angels. I think there's going to be an angel in your life in any case. And if you look at our own experience, the single strongest predictor of whether you can get money from us is whether you're surrounded by a group of excellent angels.
Let's get some more audience questions. There's one at the back there, Dean, and one at the back wall.
Hi. Do you have any advice regarding increasing credibility with investors for student-driven innovation?
I'm going to take that one. It wasn't that long ago. I was a student. So there's a couple of things that you can do to add credibility to your idea. We started out with a board of advisors, and most investors will tell you board of advisors don't do much when it comes to investing. But that's not entirely true, because the reality is there are a lot of very well-connected, very accomplished, very bored individuals that do want to work with young, passionate entrepreneurs. And you can find those people and start a dialogue about your company, have them help you shape your company, whether it's bringing in staff, introducing to potential business partners, whatever you need to improve the story for an investor, as well as they bring a lot of credibility to it. And you chase network, right? So you keep going along that lines. And I can't say it enough. There